Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Despite a holiday shortened week in the US in observance of Washington's birthday or the President's Day, the Australian dollar took a short trip and challenged the 60-day simple moving average, which comes in at 71.58. Now, if you look at the shorter time frame, is that when it did challenge that level, it didn't stay there very long and plummeted back towards 71.30, losing 30 points of its gains. It is assessed that from 71.65, if it was rejected and clearly seen as a potential bear camp, then we could see further weakness into today. Now later, the RBA is set to publish its minutes of its latest policy seating from the 5th of February, although this is likely to be a non-event. The recent switch to neutral to dovish from Governor Lowry's recent speech did give a mixed reaction. And as you can see, the market did plummet quite significantly after the Lowry did come out and say that rates could either go down or up. Also to come is that the US in trade talks with China are somewhat coming through as positive. China and the US are trying to strike a deal, and President Trump said at the moment is very complicated and that may see an extension to the 90 days, which the deadline is at March the 1st, and could see the tariffs on hold from 10%, although it was scheduled at 25% on the 200 billion worth of Chinese imports. Looking at the technicals, I do expect to see if this failure does come through today, then I'm calling back towards 70.60, which is my preferred view. But let's see how the market plays with a couple of significant moves in terms of what the RBA says and what comes out of China with the US trade talks. Well, the dollar was relatively quiet overnight. The dollar index did show some weakness and posted a low of 96.47 before settling back at 96.60. As some of you may or may not know, 96.40 is an important level. A break beneath there would give significant move to about 100 points. You can see here that the market is still holding to a bullish dragonfly doji. And if some of you aren't aware, the dragonfly doji is a rare candlestick pattern that occurs at the bottom of a downtrend, which was from the recent rejection from 115 and hitting at 112.55, and now suggests that the trend may be coming to a slight end. The dollar index did posted a bearish outside range day, which also needs confirmation. So with the market being out yesterday due to the US break for President's Day, we'll pay close attention now to how the market plays out. It is assessed we may see a move up towards 113.55.70 and before the market may start to show supply again. Resistance is around that 113.55.70 as I mentioned, and support comes in now at 112.50. Looking towards dollar yen, the market is still trading sideways since the retreat from around 111. Intraday resistance is seen around 110.65 to 110.95, and I do ascertain that the bears will return. Overall, from the technical point, keep an eye on this RSI. A break for the midway point at 50 would give further confirmation, and a target of 109.70.75, which I believe is exposed at the moment. So therefore, any advances should give potential supply around 110.65 to 95. There is a big question now whether the market has broken this level of 129.15.25. I'm not too sure. The reason behind that is the fact is there was no follow through. Although the bullish divergence on Friday did help the rally to get to this region, there's still questions whether the market has actually broken. So being a little bit cautious to my call of a bull outlook is see where we can close above 129.45 today. Earlier, the UK Cabinet Office Minister Lidington noted that the UK government is having useful discussions on Brexit with Brussels, and now waits for Theresa May and the European President Juncker scheduled meeting later today. It also has been reported that UK politics reported that a group of UK Labour MPs is set to announce resignation today. after recent press reports said that there is concerns about this in terms of the Brexit, and therefore may see the resignations. With the technical outlook still holding to a bullish case with the RSI, but not with the MACD, we do need confirmation, as I mentioned. Gold surges overnight to a high of 1,326. You can see here that from the advance that a break above this level wouldn't need to look to the weeklies, because above there looks towards the region of 1,350 to 65, and therefore could see further gains. This is a very strong uptrend. The ADX is still trending firmly, so I'm not going to say that we won't break it. It's possible that we will. If so, the immediate target is 31, then up to 36, and then eventually on to 50. Any pullback? Well, the trend line comes in roughly around 1,312, with the immediate support seen at 1,316. Finishing off with oil, market posted a fresh high, which was the high for this year. Now, from a technical point, the call is still to $58. As long as we maintain above the support, which is now seen at $54.95 to $55.25 a barrel. If so, then the designated target will remain, as I mentioned, to $58 a barrel. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.